Today, more than ever, you want to be confident about your decisions. And the best way, well, in my opinion, the only way to make better decisions and be more confident is to make them by the numbers, to use the facts and face the truth. For today, I'm going to introduce to you one of my go-to financial equations that I use to help make better decisions for my clients and for myself. Business leaders worldwide call this the napkin test because literally you can do it on a napkin. It's a simple mathematical formula that tests your break-even point. Break-even is the point at which your business covers all of its fixed and variable costs and pays you your value pay. You can use it to determine the capacity required or the sales volume that you must have, or the number of units that must be sold for you to meet your financial goals. You can also use it to test your new value pay. For today, I'm going to go over the numbers that you need to know and show you how they fit into the break-even equation. Then I'm going to give you a sample. Now, I know that math and fun don't always show up in the same sentence, but having a playful mindset, being creative, is one of the ways that you can come up with better solutions and see opportunities instead of problems. So today, as we work through this math, let's play. The numbers you will need to do your break-even calculation are first, your variable costs. These are the costs that you pay to deliver your product or service. They could include materials or labor or the gas you use even on the way to meet with clients if you travel. Number two are your fixed costs. These are the costs that you regularly pay regardless of the level of sales that you're making. They include things like rent, your phone, your utilities, your insurance, marketing expenses, and your website, things like that that you pay every month regardless of whether you're making $1 in sales or $1 million. The third number that you need to know is your value pay. This is the amount of money that you want to be able to get paid from your company or that you want to draw from your company. And this is a calculation that you make based on your personal budget and your needs, and also how much you believe you would like to make for the work that you do in your company. Number four is your value price, the fee that you will charge for your product or service. This could be an hourly rate or it could be a per unit price. By the way, if you've not watched my 3-part series, Cash Flow with Confidence, now might be a great time to pause this video and go back and learn about value pricing. It ties in very nicely with what I'm about to share. Now let's take a look at that break-even formula. It's fixed costs plus your value pay divided by your value price or your selling price minus what it costs you to produce that product or service or your variable costs. Break-even can be used to analyze all types of businesses, no matter how small, no matter how large. It can be used for many different scenarios, as we discussed earlier. But today our scenario is an independent consultant who wants to figure out how many billable hours they must bill out every month to break even, based on the price that they are thinking they will charge. Literally, like I said in the beginning of this video, you could work this equation out on a napkin, but not today. For today, let's use a piece of paper and a calculator. Our independent consultant has determined that they will spend approximately $5,000 every month in fixed costs. The value pay, the pay that they would like to pay themselves, is $6,000 a month. And the price that they're testing today is $100 per hour. The variable cost per unit of producing that 1 hour of service is $28.75. So their equation looks like this: $5,000 in fixed costs plus $6,000 in value pay divided by $100 per hour minus the $28.75 it costs to produce that hour of service, which equals $11,000 on top divided by 100 minus $28.75, which is $71.25. Our break-even point then is $11,000 divided by $71.25, which equals 154.4 hours that our consultant must build out every month to break even. If we divide this by the number of weeks in the month on average, that's 36 hours per week that must get billed out at $100 per hour to cover their fixed costs and pay them their value pay. Billing out 36 hours a week is just not realistic, especially if our consultant doesn't want to be working all the time and would really rather work a semi-normal 40-hour week, which gives them 173 hours a month total. So it's just not realistic. Well, unless they might be eating on the fly and peeing in a cup under their desk. Let's play with the numbers because we don't want them to be doing that. Let's go back and revisit both price and operating cost. So instead of spending $5,000 a month on fixed cost, our independent consultant has made the decision that they can either get a co-working space or they can set up a good office at home and start there. Their value pay remains the same, but we're going to boost up their hourly rate to $125 per hour. Realistically, there isn't a great deal of difference between $100 and $125 per hour as a consulting fee. And it might be that our consultant can attract a more valuable client by charging a higher value price if the quality of their products and services match that price. So now their new equation looks like this, equals $10,000 divided by their 125 minus 28.75, which is $96.25, which equals 10,000 divided by 96.25 equals 104 hours per month that they need to bill out to break even, pay them their value pay of $6,000, cover their operating costs, and give them a life. If we divide this by our 4.33 weeks in a month again, this comes out to 24 hours per week. Now, I think that's doable. With a few simple tweaks to pricing and operating expenses, at least our independent consultant now has time to go to the bathroom, and they can work on their marketing. They can keep their sales funnel full, and they can work on their damn plan and their business. Because like I say, you must spend time working on your business as much or more than you spend working in it. In my video, How I Plan My Time, I'm giving away my damn time tracker tool for free and showing you how you can use it to create your own damn time plan so that you can get the most out of every day. This tool is so cool because it helps you get down to the nitty-gritty of how you're spending your time now and building priorities and building your time plan around those priorities so that you can reach your goals. Now, today, this was just a first scenario about how to use break-even. And for now, I just want you to play with your numbers and determine the number of units that you must sell to break even. But I'm not going to stop there because there's so much more fun to be had and so many more scenarios to share with you. So subscribe to this channel and hit the bell to be notified when I post a new video every Tuesday. Thank you for spending some time with me today, and you have a damn good day.